What's up, everybody? It is Megan from Student Loan Planner. I am here to talk about how to qualify for the PSLF waiver. Now, if you have not already, like and subscribe to this channel. It helps other borrowers find us. It broadens our reach for putting out this information. So please, we would appreciate it if you liked and subscribed. Let's get into the juiciness of how to qualify for this PSLF waiver. Let's start with what it is. So what is the PSLF waiver? Well, public service loan forgiveness has traditionally 5 requirements that we needed to check the box for to qualify for that loan forgiveness. First is we had to be with a qualifying employer. So that is any government entity, any nonprofit or 501c3 organization. We have to be working and employed by that employer. We can't be a contractor for them. We have to be employed by them. Secondly, we have to work full-time for this entity. So if we're only at that one employer, we have to work the employer's definition of full-time. If we are at multiple employers, let's say we're doing part-time work at 2 different entities, as long as they're both eligible entities, as in they're both either a nonprofit or a government entity, as long as our hours between the 2 add up to over 30 per week, then that does still qualify for public service loan forgiveness. Otherwise, we need to be fitting that full-time definition. Now, third requirement traditionally is that we had to have had direct loans, federal direct loans. And you can find out what types of loans you have by looking at your loan list on studentaid.gov. And direct loans have historically been what's qualified. The PSLF waiver is now waiving the requirement that loans had to be direct historically. So we'll get into that a little bit more. So I'm going to put a little asterisk by that real quick. The fourth requirement for PSLF traditionally was that we had to have been making payments on an income-driven repayment plan. And there are 4 of these income-driven plans. There's pay, repay, IBR, and ICR. The 2 cheapest plans are pay and repay based on 10% of discretionary income. So those are the 4 repayment plans. Technically, you could be on the standard 10-year plan. You just wouldn't want to be on that plan because you'd pay off the loans within 10 years, which defeats the purpose of going towards forgiveness. And then lastly, we had to have made 120 qualifying monthly payments. Now, all 4 of those previous things I mentioned had to exist at the same time for a payment to count towards PSLF. Now, here comes the PSLF waiver. So the PSLF waiver was announced on October 6, 2007, and it is waiving the fact that we had to have had direct loans and that we had to have been on an income-driven plan. The 2 things that remain is that we had to still be at a qualifying employer and we had to have still been full-time and making payments, of course. But let's say we didn't know we had the wrong types of loans or we didn't know we were on the wrong repayment plan. Now is your second chance to go back and get credit for those prior payments. So let's dive into how to start this process to assess, like, what paperwork do we need to fill out? Am I eligible for this? I'm going to go ahead and actually share my screen so we can start to talk through these technicalities. Now, taking a look at this, so this is the information on studentaid.gov. It goes through the PSLF waiver, and it was announced on October 6th, 2021. So it's recent. This expires October 31st, 2022. So it expires. It is temporary. We can only take advantage of getting credit for these prior payments that were previously ineligible until October 31st, 2022. Then the normal rules will proceed going forward. Now, let's get into the key points of, or the summary of the PSLF changes that are being enacted. So to reiterate, for a limited time, you may receive credit for past periods of repayment on loans that otherwise wouldn't have qualified for PSLF. So this is a big deal, guys. Now, secondly, it goes on to talk about if you have those FFEL loans or Perkins loans that previously were not eligible for PSLF, you have to consolidate those loans into a direct consolidation loan to qualify for both PSLF and this PSLF waiver. So that's something to know, is we have to take action if we don't have the correct loans. Then it goes on to talk about how past periods of repayment will now count regardless of whether you had made a payment on time, or for the full amount due on a qualifying repayment plan. So what this is saying is that if you had any payment period where you were in repayment, regardless of if you made a payment, or regardless if you made one on time, or regardless of how much that payment was due, regardless of the repayment plan, like this is all going to now count towards the PSLF payment count. So then it goes on to say periods of deferment or forbearance and periods of default continue to not qualify. So that makes sense, because deferment and forbearance, those are periods of time where we're not required to make payments. When we're in default, obviously we're not making payments. That's why we're there. So those time periods are not going to count because payments were not made. Then let's see, the qualifying employment requirement has not changed. So that's the similar, we still have to be at a qualifying employer. So let's go into kind of the next steps. Now, how to self-identify if we're eligible for this, or if we need to be taking advantage of this. Have you historically worked for a public service entity? Think back to as far back as October 1st, 2007, because that's when the PSLF program was enacted. Did you have any eligible employment, full-time employment since then? And did you make payments during that time? And if you did, then you could be eligible to go back and claim credit for this PSLF waiver opportunity. And it might put you a little closer to forgiveness than you otherwise thought you were. If not, get your loans immediately forgiven, which we have seen as well. So next steps, if that's the case, if we've self-identified that we've been working in a qualifying employer, or we did in the past, we should have some payment counts that we need to collect. If we have those FFEL loans or Perkins loans, we need to do a consolidation first. Before we can take advantage of this waiver, we have to do a consolidation. And you can check, again, you can check the types of loans that you have within studentaid.gov. You just log into your account here. You'll see your loans listed, and you can view details on what types of loans you have to determine whether or not you need to consolidate. Next is that if we are not going to hit 120 payments right now, like if we haven't already made 120 payments while being full-time at a qualifying employer, then we also need to make sure we're applying for an income-driven plan. So let's kind of go through like that next step. So to consolidate, what you would need to do is on studentaid.gov, you would go to manage loans, and you'd go to this consolidate my loans section. This is where you consolidate your loans or combine them within the federal system, and it converts them into a federal direct loan that's eligible for PSLF. So this is a demo of the application, but when you go through here, you'll see your loans listed. You'll see your Perkins loans listed if you have Perkins loans. They're not being issued lately, so you might not have them. But it does give you the little warning that if you're working towards cancellation of your Perkins loans, you shouldn't consolidate them at this time. This is only for certain professions, so you can look at more information here to make sure that that's not relevant to you. Generally, that's more so for teachers or police officers, certain very specific professions. Then we'll scroll down, and it'll ask if we want to do a grace period, which this just means, do we want them to delay processing your application? You can say no, that you don't want them to delay, unless you do for some reason. Next, it's going to ask if you are seeking or if you are employed in a public service entity. You would check yes to this, of course, if you're doing this PSLF waiver, if you're doing the consolidation for the waiver. Then it instructs us to choose Fed loan servicing for the loan servicer. And that is because Fed loan servicing is still processing this PSLF waiver information. Fed loan servicing is stepping down from loan servicing at the end of 2022, but they are still responsible for processing this PSLF waiver stuff. So go ahead and select them. That might mean that your loans get moved over to Fed loan. They count up your payments. If you're not at 120 payments yet, you could be moved again to the servicer that's taking over for Fed loan. And that company is called Mohila. So there is some transition over this year, just so you know, but that's what to maybe anticipate there. And that's why we need to choose Fed loan here. On this next page, it's going to want you to estimate what your payments are going to be. If you know that you have not made 120 payments yet and you're still pursuing PSLF, then we need to be applying for an income-driven plan. So the waiver is waiving those rules for the past and those past payments, but they are not waiving it going into the future. So going in the future, we need to be on an income-driven plan if we're still trying to get to that 120 payment threshold. So here you would put in your adjusted gross income, which you can find from your most recently filed tax return. Just look at your 1040. And it would be line 11. That's your adjusted gross income. Then put in your family size and your filing status. It'll give you an idea of what your income-driven payments would be, depending on which plan you're looking at. And then you can specifically select the income-driven plan down below. This would help you apply for the income-driven plan. Then we'll move on. It'll go through the terms and conditions of the consolidation. Then it'll go on to help you put in your personal details, which most of it should already be there. You just want to confirm that all of it looks good. You'll review it, sign it, get it submitted. It'll be sent off to Fed loan. You'll get a bunch of updates on this as it's being processed. They'll tell you that they're starting processing, that they've completed processing, and that you're approved for the repayment plan. So this takes about 30 to 45 days for them to do from what I've seen. So this would wrap up the consolidation process and getting yourself on the income-driven plan if we had those FFEL or Perkins loans. Now, moving on to if you already have direct loans now, you've just maybe been on the wrong repayment plan, or you want to go back and claim credit for prior periods of time, those folks need to just submit an employment certification form. So that is done. And this would be step 2 of folks who had the FFEL loans. Next step would be to submit a PSLF employment certification form through this PSLF help tool. So this is under manage loans, under public service loan forgiveness. And then we go to this very first link that says public service loan forgiveness help tool. We'll drop down, and then it should say start here to start the application. What you'll need is your employer identification number for your employer or for your past employers. Make sure you have this before you start this, because that's the first question it asks you for, or that's the first input that you have to plug in here. And then you want to know your employment dates as well. So your exact month, day, and year of when you had started that public service job and when you had left that public service job. If you don't know it, you might need to call that employer and confirm, because it's going to ask you for it. So that's the next step. You would go through, plug in all of your past eligible employers since October 1st, 2007. That's when the program started. Nothing before then is going to count. And then what it'll generate is this document here. So it generates this PSLF employment certification form. It already has all of this information filled out for you. You would need to print this, sign page 1, take this to your employer or your past employer, and they would need to sign page 2, just verifying that you were full-time and you did work there for those employment periods. So that is step 1 and step 2. Or just step 1, this employment certification form is just step 1 if you already had direct loans of how to qualify for the PSLF waiver. And if you're not already on an income-driven plan, and we know we have payments to go to get to 120, you would also need to apply for an income-driven plan. And that can also be done on studentaid.gov. So underneath the lower my payment section, you can go to apply for an income-driven plan. And if you're a brand new applicant, you would complete this first application. And it looks similar to the one we walked through with the consolidation. So I hope this video was helpful. This is the way to start getting your payments to count historically. It starts with that consolidation if needed, submitting the employment certification form, getting the loans, having the loans get calculated over at FedLoan. If you have questions about your plan or which income-driven plan to choose or how to go about this process for your situation specifically, Student Loan Planner provides one-on-one consultations. So we would be happy to help you with this process and put together your custom plan. You can schedule at studentloanplanner.com, and we have a booking section or underneath Get Help. We have a booking link that you can go to. But hope this was helpful. Hope you have a great rest of your day today, and let's go get our loans forgiven.